Right. Well, let's start. Good afternoon once again. My name is Adam Jasa. I'm deputy editor at Visegrad Insight, and it is a great pleasure to welcome you to our State of Poland discussion. This time on the Polish economy. We're very grateful to our subscribers who joined these events this week, and we support our activities. And we encourage, of course, those of you who are not yet our subscribers to become our subscribers. Earlier this week, we discussed the political scene in Poland ahead of the elections. Yesterday, we looked at the Polish-Ukrainian relations and the outlook for that. And today, we want to focus on the Polish economy. Tomorrow, we have our last event in the series because then it's election time. And tomorrow we're going to discuss the state of Polish defense, a topic which became a little hotter than we expected with the resignation of Poland's top brass and just days before the vote. So I invite you to also register for that. You can register through our website. There will be a link in the chat. And those who are not subscribers can subscribe. There's a special offer prepared by my colleagues for an annual subscription of 29 euros to Visegrad Insight publications and all our foresight. So with this shameless self-promotion now over, allow me to welcome our distinguished panelists with whom we will try to look into the crystal ball and discuss the future of the Polish economy in the short and medium term, because long-term forecasting is a completely different ballgame. So let me introduce first Beata Jaczewska, Climate Action Sustainability Advisor at Deloitte, who was a former deputy minister in the Polish government, an expert on everything climate and energy related. Beata is also member of our board, which is an important thing I should mention. Welcome, Beata.
Thank you, Adam. Hello, everyone.
And our second speaker is Marek Roskrut, Chief Economist for Europe and Central Asia, and Head of Economic Analysis for Europe, Middle East, India, and Africa. So basically half of the world. And he's doing this at EY, the rival consultancy to Beata, but today they're in their unofficial capacities. And, let me just say that I had the pleasure of working with Marek some time ago, and I believe he's among a very narrow group of people at the pinnacle of the Polish economic profession. He also spent some time in government and at the central bank. And finally, last but not least, we're joined by Martin L., who is a Visegrad Insight Fellow and senior journalist at Gospodarskie Nowiny, Czech publication. He speaks fluent Polish, and he follows Polish politics and economy with huge curiosity. So he just committed a fantastic analysis for Visegrad Insight on the challenges for all V4 countries in our region, and he will provide some insight as well today. So again, welcome to all of you. Thank you for joining. And let us begin by looking at the big picture. The latest IMF forecast for the world were just released. And when it comes to Poland, we saw prediction for growth revised down to 0.6% this year from earlier forecast of 1.2%. And for the next year, IMF is basically keeping it flat at about 2.2%. Inflation is supposed to fall from average 12% this year to around 6.4%, which is still well above the central bank target. So to sum up, historically, these are rather disappointing forecasts for an economy that used to be Europe's growth champion. So my question to you, and I would like Marek to start first, is, what is holding Poland back, unless, of course, your own forecasts show something else?
I think, thank you, first of all, for inviting me, for having me here, and for your very kind words at the very beginning of introduction. When it comes to IMF forecasts, they are in the range of possible outcomes considered by different economists. My team is currently in the midst of the next forecasting round, which will be launched in 2 weeks, more or less. But when you look at the current performance of the Polish economy and the outlook, I would say it's a bittersweet picture. So maybe starting with the current situation, we haven't avoided stagnation of the economy affected by the slowdown, but also by very high inflation that until recently exceeded growth in nominal wages, thereby squeezing households' budget and consumption. And therefore, the Polish GDP as of mid this year was still below the level of GDP in the first quarter last year. So over this 5 quarters, it actually slightly contracted. We expect some recovery this quarter, third quarter, actually, which already passed, and a stronger rebound in the fourth quarter this year. But the growth, again, we are still haven't completed our forecast, but growth of around 0.6% by IMF is something, one of possible outcomes. For the next year, indeed, there is some recovery. We'll see some stronger rebound, and next quarter largely driven by consumption recovery, because we have to remember that in most European countries, including Poland, consumption has recovered much less than GDP relative to pre-pandemic levels, because again, as already mentioned, elevated inflation exceeded growth in nominal wages, which actually reduced consumption in many countries. In our case, actually, it has increased, but to a very small extent. So it also, when it comes to the last quarter this year, we also expect some rebound in public investment, because this is the end of a previous financial perspective when EU funds still can be used to, and this is that will also stimulate growth probably in the last quarter this year. But there are many looming challenges ahead. And one of those is related, so let me comment on inflation. And indeed, so far we have experienced a significant or rapid decline in inflation since its peak in February this year. But you have to remember that majority of that decline has been so-called free lunch disinflation, because it's been driven by base effects, also decline in commodity prices, including energy commodities. Although obviously there are some transmission channel supply bottlenecks, relaxations that also translated to and passed through to decline in so-called core inflation as well. But the services price inflation is still relatively resilient, and we have to remember it's driven also to a larger extent than, for example, goods prices by the cost of labor. And as already mentioned, until recently, nominal wages have grew less than inflation, but it has already changed. Also largely due to decline in inflation, but nominal wage growth remains elevated, and it will continue to remain strong, largely due to tight labor markets, because we have to remember that despite slowdown and some cooling in labor market situation, labor shortages remain elevated and labor markets remains tighter than before the pandemic's outbreak. So we face actually structural labor shortages and structural tightening of the labor market. And add to this, very significant growth in minimum wages that will increase by roughly 20%. Add to this very significant indexation of pension benefits. Add to this also political promises made before these elections, be it by governing party, ruling party, but also by the opposition, that we can expect this time that many of these promises will be implemented, at least in the short term, which would translate to decline in effective taxation of incomes, or also increase of wages in public sector, which would be yet another factor stimulating demand. So we can expect very strong growth in real wages next year. So there will be particularly strong increase in real wages next year, which on one hand may stimulate consumption and thus fuel growth, at least in the short term. But at the same time, that may stimulate inflation growth. And I would say also, because as you mentioned at the beginning, we cover a large part of the world and prepare forecasts for a large number of countries. And to be honest, Poland is among the countries for which forecasting inflation in the short term, I mean, over say the next year or so, is particularly difficult, because we have to remember that there are still many administrative measures in force, including energy price freezes or maintaining a reduced VAT rate for selected food products. So, and these account for more or less 3 percentage points of inflation. The question is, when these measures will be withdrawn if and when. Also, taking into account that parliamentary elections that are to be held this Sunday will also be followed in spring by another elections to Euro Parliament, there are local government elections, and we don't know whether early parliamentary elections will also take place in spring, depending on the outcome of this week voting. So all of that means that in the short term, we may not expect significant fiscal consolidation. We may expect government measures to keep inflation reduced rather than withdraw those that could translate into strong price increases, which also means that this real income may increase even more due to relatively low inflation, at least in the short term. However, if these measures are withdrawn and we see a lagged impact of increase in demand, also driven by significant surge in real wages and real income, that may translate to elevated inflation in the second half of the next year. Again, that's largely driven by government measures, but this also means that in the short term, we may see some further declines in interest rates. But then the question is whether those, this interest rate relaxation or interest rate reduction will be continued, especially in the face of these price pressures challenges. So huge uncertainty, because inflation generally, as I mentioned, has been free-lunch disinflation. It will continue for the next 2-3 months. There will be some base effects and some volatility. But then I would say the last mile will be most difficult. And meeting inflation targets in Poland, IMF actually in their projections even till 2028, they don't expect inflation to be back to the target. And well, we don't present focus for till 2028, but also in our latest outlook, inflation in Poland was not expected to return to the target even in 2026. So in contrast to majority of European countries where we expect inflation to be back at the target level next year. So Poland, together with Hungary, will continue to be, I would say, best performers. I mean, countries with the highest inflation next year, according to our latest projections, and I do not expect significant changes in the current forecasting round. You're on mute, Adam. We're happy, obviously, to discuss other challenges. I'll be happy to discuss other challenges to growth, but maybe in the next round of questions.
Maybe in the second round. Maybe a quick follow-up question. To what extent does this slightly worrying outlook on inflation is going to influence overall economic balance and have impact on the economy? We've seen the economy is pretty resilient despite higher inflation.
That's correct. I mean, but still we also should remember that these differences across countries may become, in relative terms, more evident next year when disinflation will be largely completed in many countries. In our case, we may also remain a country with elevated interest rates in the medium term, also due to higher inflation. And we should also remember that we are in the environment of higher for longer interest rates, in our view, which means that in the world, actually, we already face an increasing debt. We benefited from higher inflation that also supported government revenues, also helped reduce in this transitory period the ratio of debt to GDP ratio, because GDP in nominal terms increased significantly due to higher inflation. But now the government also needs to refinance actually its spending needs at higher rates and at higher costs, and also add to this increased military spending and all these promises already made and additional transfers that will be very difficult to withdraw from, also for the opposition. That increases fiscal burden. Maybe in the future, it will also require increase in revenues, for example, through higher taxation, be it directly or indirectly. But with higher rates, it means that in the short term, this higher inflation and higher consumption may fuel GDP growth for the next year. But in the medium term, it will require containment of that inflation through tightening of fiscal and monetary policy that will actually subdue economic growth in the medium term.
Right. Well, thank you very much. You actually eliminated already my second question, which was about fiscal consolidation. So maybe just for our listeners to put some context on it, Poland is projecting, the current government is projecting the borrowing needs to almost double to something like 20 billion euros next year, and the deficit, the fiscal deficit, to go up to over 5% of GDP. At the same time, it seems that the demand for Polish bonds is still solid, and investors are looking with some confidence. So so we can move on to the next topic, which is energy policy. And Poland has been among the countries a little bit slow in adopting economic transition policies, and of course the energy crisis related to Russia's aggression on Ukraine just compounded the problem. So I wanted to ask Beata, from your perspective, how important is that for future growth and for keeping Poland on track for modernization and for attracting investment?
Thank you, Adam. I think it's the substantial question, how we are going to preserve Poland's competitiveness in the long term without answering the big questions about the transformation of Polish energy sector. And this is one of the ghost topics during the campaign, not existing at all. Nobody was discussing it with the voters. But the world is not stopped and impatiently waiting for the results of the Polish election. The world is quite advanced in the discussions, and let me just draw your attention to the three things. The one is the energy and the challenges that are also accelerated by the Russian war in Ukraine. So this is the first aspect we need to remember. The second is the latest developments in the climate policy and the COP28, and that is going to happen in 2 months in Dubai, discussing the extraction of fossil fuels completely. And the third thing I wanted to talk about for a moment is the economic transition that I define a bit differently. And let me just save it as a dessert after the big observations here. So with the energy as such, we do not discuss energy in Poland. That's something that I really find as a shortcoming of the public discussion. We do not know, we are not aware that the world is really about to decide of extracting the fossil fuels forever. So this is basically, it's not only the emission reduction, it's about stopping subsidizing the fossil fuels in general. So that would be a game changer for sure for Poland's economy. And in that view, let me also say that the latest discussions on the renewables energy directive in Brussels, there were only 2 countries not voting in favor, and these were our dear friends from Visegrad, I mean the Hungarians and us, and Polish delegation was also not really supporting the renewables in Europe. On top of this, we have the constant discussion in Poland about the nuclear energy, and it seems that the current government has advanced the nuclear policy so far that it would be difficult, if any change after Sunday, to withdraw from that. Me personally, I think that with the great share of renewables, we do need some nuclear. So I would be very much for keeping the nuclear plants in the reconstructing of the Polish energy sector. However, again, there are some voices from the more ecological angle, from the NGOs, that were not properly heard yet. So only today, I believe I've read that the Polish entrepreneurs were not consulted. So these are the steps to be taken, even if starting with the building of the first nuclear plant in Poland, which again does not stop the topic. I mean, the policy of the European Union is quite well advanced in this respect. So we are still facing some discussions that we cannot avoid on the European level.
Right. The interesting question when it comes to nuclear, of course, goes back a little bit to what Marek was saying, namely, it costs a lot,
Yes.
and you build it over 20 years, right? And correct me if I'm wrong, but it both feeds into these concerns about the fiscal position of Poland, given all the other expenditures, because it seems to me, so far, as far as I understand, there's no too much private financing provided for this. So it's not a private sector driven thing. It's one way or the other. It's driven either by state companies or by state subsidies. So would any of you like to comment on the actual probability of this being implemented in terms of just pure financing, rather than even some of the concerns about, I don't know, safety, ecology, and so on? So, but let's start with finance. Marek, any views on that?
I would leave maybe energy infrastructure financing to Beata, but I'd be happy to comment on the impact of those on competitiveness and growth prospects for the Polish economy, if you don't mind.
I would say that the partially the costs of the funding the nuclear program in Poland, they can be borne by the European Union, but of course this is under the conditions, right? And not to mention the National Recovery Plan that is still not financed, and it's quite difficult for this moment, for particularly today, to see how it's going to change after Sunday, right? So this is and the result of the election does not really matter. The next government would have to start seriously talk to Brussels about financing the energy transformation as well. So so that would be my comment on this.
Thank you so much. Marek, yes, please.
Especially that we are no longer in a zero interest rate environment. An important, I believe, element related to transformation is the impact on competitiveness of our companies that have largely benefited from being integrated into global value chains since mid-90s. We should be aware that around 38% of our value added is exported. So almost 40% of our activity is actually dedicated to foreign markets. And this part of the economy, so-called exported value added, has grown significantly over the last 2 decades. And actually, this has been the main engine of the Polish economy. It has contributed the most to the change in GDP over time. And when you account for demographic developments, that is, population is contracting, obviously our incomes are increasing. We benefited largely from immigration from Ukraine that also contributed to our labor market and labor supply in the recent period. But generally, demographic outlook, even if there are stronger immigration flows, still points to contraction of population. So the number of consumers in Poland will be declining, which means that if we want to continue to grow relatively fast and catch up with more wealthy economies, then we have to wonder, we need to generate value added, and somebody has to purchase that, which means that if there are fewer and fewer consumers in Poland, we need to seek those increasingly outside Poland, also in other countries, which means that the exports should continue to be the main engine of the Polish economy. Otherwise, we'll not be able to grow as fast as we would like to, which also means that we need to remain competitive. While labor costs are increasing in Poland, obviously we need to increase value added. But one important factor that will determine our competitiveness is also how green our production is. So, and it's also, consumers will decide, but also our partners along value chain will require, we expect us to be less, polluting and then more green producers within value chains. Just another comment.
Right.
Thank you, Marek. This actually brings me to my last point on the green transition of the economy.
Please.
Because something that is not being discussed in Poland intensively enough yet is the entry into force of so-called CSRD, the Directive on Reporting Climate-Related Non-Financial Disclosures, which means, again, that us in Poland being so well rooted into global production chains, we have our companies would start reporting their emissions as well, or the big companies from the Western Europe would be simply obliged to calculate the emissions from their global chains, including Polish companies. And this is something we are forgetting. Also, in the perspective of the rapid accession of the Ukraine to the EU, when Ukraine is being rebuilt only in a green manner, so only in a green way. So these are the issues the next political group ruling in our country would have to answer for sure. That's me for this round. Thank you.
Thank you. Well, Martin, a question to you is more on the sort of political economy here. Namely, we've seen some problems on the institutional side of managing the Polish economy. The Polish central bank became very politicized. We've discussed inflation, which seemed to have been neglected by the central bank for a while, and we see the central bank governor being very much involved on the side of the government, even in sort of daily debates with the opposition. He took a very robust stance against the euro, claiming that it is going to harm Poland. There are question marks about the independence of other market regulators. In your opinion, does it matter at all, or is this economy just going ahead regardless?
I was just recently in a reporting trip in Kielce, and I asked a little bit differently this question of one of the local businessmen there, if the economy or business is still connected with the politics or not. And he said that it's now a little bit worse than it was about 10, 15 years ago, but basically that he doesn't see big differences between the previous government of Donald Tusk and the current government in terms of relation to the business. But and what he says is that he's afraid that any new government which will manage public finances will squeeze the business for the new taxes, because all promises made on all fronts, mostly on the law and justice front, must be taken from somewhere. So this is kind of fear of the local business from Kielce in terms of future development. And I have a nice comparison with the Czech Republic, where also we have this non-discussion about euro, for example, that this is absolutely nothing to talk about because of one of the five parties is now a five-party government. Others would be willing to talk at least about it. So I see that the similarity that the political or ideological reasons are kind of obstacle not to go into the Eurozone, but to discuss it even. So that's kind of thing when both our economies are export oriented, and I can confirm Marek's notion that the Polish companies are now more and more trying to go into the Czech market, for example. We are as far, for example, export go. The Czech economy is the second or third, depends on how we calculated the export or import partner for the Polish economy. So I see the Polish business looking behind the borders, also the small companies. So regardless of the political options. So I see it as a kind of, on one side, a lot of political economy, if you want to say it so, inside it, but on the other hand, quite a strong resilience of the Polish business and Polish companies. I speak about private-owned companies, looking for the solutions in these uneasy times and looking for the new markets. Basically, it's also important to mention from the Czech perspective, for example, that Polish economy has quite a strong state-owned part of the economy, which is something we don't know in Czech Republic, for example. So I think we have to put this also into special brackets, the role of the state-owned companies, not only in the economy, but also in the politics. But this is for some, I would say, completely different debate.
Marek, I see you want to comment on this.
Because there are two themes here. One on government intervention and the presence of government in the economy, and another on exports. Again, since I expect, that these geopolitical issues are also shocks in the energy markets, changes in trade relationships, and this in geopolitical landscape will actually increase permanently, or at least for a long time, the presence of governments in the economy under the resilience and security. And also many companies, and I would say the tolerance of the society for such interventions has increased in my view. They expect actually governments to shield either companies or consumers from such events. And there is a risk, that these interventions will definitely go too far, that we can observe in many sectors. And that's also very much related to competitiveness of the economy and energy transformation we just mentioned, because that is also connected with introduction of carbon border adjustment mechanism, changes in the ETS system that will expose especially energy intensive and exposed to international competition sectors of companies like steel industry, chemicals, and so on, that will require automotive sector. And we can now discuss and see the tensions between European and Chinese markets. And that will also make associations, industries to request either from governments or European commissions to respond, provide some subsidies or other measures that would shield them from competition, whether it's unfair or fair, that's another story. And in terms of exports, that's also very important for the Polish economy, because Martin mentioned, yes, our exports, Czechia is the second or third exports market. However, a large share of that exports that is sent to Czechia actually is processed and exported elsewhere, re-exported. So in terms of final market, it is US market that is very likely now the second most important final market for Polish products, that they go through Germany, Czechia, also China and other countries to reach that market. The importance of the Chinese market is increasing. You should remember that China is now more or less of the size of the European Union. But for the next decades, it will depart. And the size of the Chinese market as such will be much larger than that of the Polish economy. So when I discuss the role of exports market, obviously we still can benefit from, diversification, nearshoring to some extent, and further increase our share in Western European markets that will remain the key markets for our exports. However, in terms of further growth, we need to increasingly export and reach other markets, especially emerging markets, that will be much more dynamic in the coming years and decades. So any changes in this geopolitical landscape, the geopolitical trade blocks that may be created, that would generate probably more informal rather than formal trade barriers. But we still can limit our access to those fast-growing markets, which poses a threat to long-term growth trajectory for the Polish economy.
Right. Well, thank you all for this insight. We're now going to switch to an off-the-record mode.